Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
Good morning, everyone. It is Wednesday, June 12th, 2024. My name is John Pieranunzi, and this is the opening swing. Let's begin today, as we always do, with our news. Out of Europe, Europe is mostly unched, down about something like 0.25%, not a big move. Out of Europe, the key news we had the German inflation numbers. We had several numbers out of Great Britain, trade balance, industrial production, etc. We also had several different ECB speakers over the course of the evening. Like I said, Europe is, for the most part, unched. Coming into the US hours at 8:30, our news driver is CPI. It's a big one, guys. It's the one we've been waiting for. After that, at 10:30, we have the EIA petroleum status report, also a very important number if you trade crude or the energy complex. Followed by that, we have a bill auction, not really a big deal today. And then at 2 o'clock, we have our FOMC announcement, which is the other big one, followed by the 2:30 press conference. So essentially this week we had nothing, big number, big number, big number if you're a crude trader. So that's what we have today. It'll probably be busy. Let's take a look here at our monthly chart just really quickly. So on the monthly time frame, the thing that I've really been emphasizing, not really a chart that we look at too much for day traders, but I like to look at it a lot. And what I've been emphasizing is we're seeing mostly overlapping bars, but since this low was put in, we're defending the lows. We're putting in higher lows, and we're also showing the ability to take out the prior high. So when I see mostly overlapping bars, but lows being defended and highs being traded, to me, I call that balance with a skew for higher prices. But however, what's happening right now in this moment, we're holding above the prior month's high. So if we show the ability to continue to explore prices above, this will start to look a little bit more like price discovery up, which is the most aggressive bullish action we can see, and it's happening on a large time frame. So taking note of that, let's go to the weekly. And of course, on the weekly, seeing the same thing. We're seeing lows being defended, and we're seeing the ability to trade higher prices. So what does that mean for me when I see that happening on higher time frame charts? It means that for me, that by default, I'm a little bit more bullish. I'm a little, when I see monthly and weekly charts making higher prices, I start to get a little bit more interested in buying pullbacks on the daily or the hourly. But that's why I mentioned that. But anyway, we're seeing the market as of now accept higher prices. So that's the key take-home message here. Let's go to our daily chart. Here's our daily. We're seeing more of the same, which is basically we create an area of balance, we defend the low, and we take out the high. That's what's happening. On the daily chart, the key narrative I've been talking about revolves around this area of balance from 0575 to 49s. And in this area, I don't have a profile up, but there is our VPOC of this small region is the 24s. And the area I've been focusing on is 24 to about 33.5, which is right there. And we're seeing it defended. Why am I focusing on this area? What's the narrative here? We broke into higher prices. We found an offer up here. There's a clear sellers up here. Tested around, pushed above, and released lower. Found buyers. Reverted higher, got back into this area. And then what happened? Now we're above and we are holding pullbacks into it, and now we're above the high. So that's pretty bullish to me. It's pretty bullish, and the key area of support is right here, based on what I just said, with the key prices being the 24 to 33.5. That's not so relevant today. Well, it could be depending on it, but that was the test we got yesterday, and we've pushed higher. So now we're on to higher prices. We have this HVN right there, right around the 70s, and that's going to be key today. Let's go on to smaller time frame charts so we can talk about that a little bit more. We'll go to the 2-hour structure chart here. Here we are on our structure chart. This profile is from last week forward, and it's an important one because here's the area I talked about, 49s to 05s. We pushed higher, tested lower, started to see the pushes higher kind of get some more juice. And then right here, we just ripped through this area. Now we have this big unauctioned area right there that we ripped through. So yesterday, what I was talking about is we had a little bit of a market structure high going, a little bit of a market structure low, and it was forming a wedge. You can see very clear the wedge around this distribution area. And so I talked about a couple different ways that we could break that wedge. You could either stay within that wedge and everybody should probably just do something else for the day, or we could get the wedge breaking a couple different ways. And the way that we ended up getting the break was really in the best way. I mean, it was the cleanest trade I talked about. We got a nice break of the 41s, an obvious test, and then reverted higher, and we got to our prior settlement target. So that was a fantastic trade that actually worked out in the S&P. So that was great. Like I said last week, we get those sometimes. And when it happens, you got to take advantage. So anyway, what we got yesterday out of the ways that I was talking about that this wedge could break, we got the break and reverse, test and reverse. And then one of the other ways that I was talking about yesterday that this wedge could break is with a break and grind. And so what I'm seeing right in front of us right here is we got the test reverse, and now it really looks like we're getting the break and grind. And so unless we're already above the prior day's high. So unless this data comes out really surprising, I'm expecting this break and grind to continue to test the 5400s. And potentially higher, but that's the next clear test on this break and grind action I'm seeing. This theme of higher prices, for me, will stay in effect until and unless we get below the 70s. That means a pullback to here is not, a pullback into this area. I'm not necessarily looking at it as a reversal unless we break to here and then we cannot get back out of range. If we can't get back out of range, then I'm starting to look at potentially lower prices. But if we just get a test to here and then we get back out of range, I would probably expect that to attack the high. That's what I'm seeing right now. Let's go to a 8-box and be a little bit more specific with these plans. Find here. Okay. So let's give a discussion quickly of what areas are important. So we have the prior high, which is right here. We've already traded through. We have our developing overnight low. And then we have this piece of structure right here, which kind of corresponds with our overnight low. Right here. And I'll kind of include the below at the really like 65 to 70 region. Below that, we have our 60s, which is our 2-day VWAP. Then the 50 handle, 45 to 50 region right here. Then we have yesterday's low, which is the 34 halves, just above the former all-time high, down to the 24s. And above, we have 5400, which is just an option strike, and then the 14 halves, which is just one vol up, not a structured target, but just one landmark. So let's talk about. We'll talk about what we can get today, but I'll tell you that I'm generally much more hesitant to try to handicap price action on a day where we have so much that could just change things. Like if this data comes out, if it comes out the way that we expect, let me get rid of this. If it comes out the way that we expect, then I'll expect just continued higher prices. If it comes out, differently, anything could happen. But if everything comes out as we sort of expect it to, the most expected price action for me will be continuation higher from probably right from here to test into the 54s. Then once we get to the 54s, that would be the first question mark for me. Because like I said, any volatile pullback would have potential in my eyes to get bought back up. And the key areas for that, like I said, the 68 to 70 region right here and yesterday's high. Because if we push higher and we pull back into here, as long as we get above yesterday's high, I'm still open to the bullish idea of continuing higher to take this high and just commence excursion high, more excursion higher. So is any pullback into this broad area, I would be open to support. Now, the other thing that could happen is we could see the market push higher into the 54s, around the 5400s, and kind of round off, fall lower, test back into the prior range, be unable to get the high, and then start exploring prices lower. So a rounded top then is unable to get the prior high, I would start to look for excursion lower. The target area, like I said, would still be, depending on if we're up here and we start reverting lower, then obviously our targets, let's get rid of this for a second. Then if we start to see this kind of rounded top action, then obviously we're targeting our gap close. If we open in a gap and prior settle, then we'll target all of these areas on the way down. Really the key target area would be this 70 down to 65 single prints region. So on any type of a rounded top that fails to get the high and then gets back below the prior high, the key target area would be these singles, 68 to 70, 61 to 70 singles region. This would be the area where we could also then, like I've said, see support get back out of range. But this kind of rounded top action and then reversion, I would look for a target here and go. Another way it could happen, we could see this sometimes happens too. We sort of see everyone's expecting this price discovery higher to happen. We go quick pullback and then just instantly reprice higher and then commence the grind at a higher price. That could be another way this happens. These probably, like these bullish ideas, I have to be honest, will be potentially more difficult to trade because we're at all-time highs and it just gets a little bit trickier. The surprise scenario would be a rounded top that does what I said, falls back into range and really starts to explore prices lower. I'm not necessarily expecting this today, and even if we do get this, I would still be looking at support. Like if we, as I've kind of mentioned, this area I'm looking at as support. Basically, it's 66 to this band, which is 66 to 77. This whole broad area really focused around the 70s. I would expect support on the initial test of this area to get back out of range. If that does not materialize, then I would be open to a drop lower. The 60s would be another place right here. So we're looking at 70s. We're looking at 60s as area as targets on the way down or support. And if that breaks lower, I'm looking at the same thing around the 50-45 handle right here, which would be sort of the lower bounds of this distribution. So all of these areas would be, if we get on the short, we fall back into range. These would be targets on the short side and also places where we could see the market find support, defend a low, and start pushing higher. So that's what I'm looking for. I am not expecting price below the 45 to 50 region unless something comes out completely crazy, which could happen. It could happen. So I'm just throwing that out there. I'm not expecting price below here unless something really surprising happens, which could happen. I will also throw out, just for completion, it seems so unlikely, but it's possible. This is actually a pretty weak low. right here, yesterday's low. It's pretty weak. So, I mean, depending on the amount of volatility we see, it also still wouldn't completely shock me at all to see somehow this low get broken, see buyers below, and then see the market start to revert higher and start to trade. Now, I don't know if we get that, I don't know how much range we would have back up, but it wouldn't surprise me to see this low taken and then bought back up. I'm just throwing that out there because we're in a very bullish environment. So what does that mean? For me, it means shorts are kind of light and tight. I'm not holding a runner on shorts. If I get on a good long, it looks to be a structured turn, I do hold the runner in that situation. So that's what I'm seeing today. But really, I mean, the most likely scenario that I'm seeing is some type of a continued excursion higher that kind of rounds, kind of grinds. And then depending on the number, we could see either a pullback continue, or we could see a pullback fail to continue, or we could see an acceleration from this area that then rounds at different prices. So those are kind of the key ideas I'm seeing. Grind, accelerate, grind, pull back, grind, reverse. That's what I'm seeing as of right now. But I'm gonna cap it there just because on a day like today, really what could happen is like endless. Like anything could happen. I mean, that's every day, but really with all this data, almost anything could happen. So in terms of price action, I'm just going to cut it off there. I will say I want to add a couple other things though, just about preparing for a day like today with big numbers. For this may be a difficult day or week for newer traders. Like for me, when I started, I was in prop. We were a group that we really traded a lot of news all the time. Like news releases were always looked at as a day that you could really do well. Um, and that was the environment I came up in. Now I look at it a little bit more differently. I'm not always so eager to trade volatility. Sometimes it's good, sometimes it's not. But if you're a newer trader, sometimes what happens on weeks like this is the market is slow or it's hard to trade, Monday or Tuesday, so you don't get that much. And then on Wednesday, we have all these numbers, and you think, oh, it's going to be all kinds of movement. We're going to do great. But sometimes you either get smoked in the volatility or you just don't know how to trade it. And in my experience, if you're newer and that's a situation, that's okay. That's all right. Like this is a difficult week when we have like nothing on Monday and Tuesday and then just all of this data on Wednesday. That's difficult. So if you're a newer trader and you don't have an answer for how to trade this yet, it's okay to stay out of it. It's better to stay out of it if you're not sure. And in my experience, like when I was younger, I'll tell you that most often the best trades for me were after the numbers, meaning the next day. Because what I would tend to see happen is you'd see, whatever's going to happen today, we have some kind of volatile movement, it goes up, down, whatever, just trades around in some kind of crazy way if we're not directional. And that's very hard to trade. But then what you get sometimes the next day is all of a sudden all of those auction landmarks that got put in today kind of get clearer and we can trade against them a little bit better the next day. That's what I've experienced. So if you don't have, if you don't get anything today, and if you didn't get anything Monday or Tuesday, I would say just relax. Don't worry about it. It's not a big deal because tomorrow might end up being the best trade of the week. Who knows? But if it's not, and if today works out for you, well, you know what to do. Clock those ticks. I'm going to wrap it up here, guys. I hope everyone is having a great morning. I hope that great morning continues and you find a way to improve your trading today. I hope that today ends up really good for you, and I hope that most of all, you can make somebody else smile today because that's always what's most important. Good luck with the numbers. I'll be here tomorrow, and I hope you will be too. Bye-bye.